Commerce documents used in home trade. Documents used in home trade. A document is written information of transactions between different parties such as wholesalers, retailer, and consumers evidencing the currents and accuracy of a business transaction on a given date. A transaction is any dealing between two or more parties involving the exchange of goods or services with a monetary consideration. The following are stages and documents involved in home trade. I. The birth of an idea/requisition. Note: before a transaction takes place, there must exist in the mind of the buyer or a company a desire for a particular commodity advertised in the media like television, radio, the press, etc. This calls for the different departments of the company to submit their request for the desired commodity to the purchase department using a requisition note. Requisition note is a document prepared by the different business departments or business branches or buyers requesting for the supply of goods named on it. Roman 2. Inquiry letter of inquiry. This is a document prepared by the buyer and sent to the prospective suppliers asking for information about the goods available for sale. Such information may involve the types of goods, prices of goods, quantity, the terms of sale, payment, and terms of delivery. An inquiry can be made orally or by writing a letter of inquiry. Contents of a letter of inquiry. A letter of inquiry is written by a prospective buyer to a supplier seeking information on things such as I. The types of goods or services available for sale. Roman 2. Prices of goods and services. Roman 3. Terms of sales, i.e. cash or credit. Roman 4. Sizes, color, and design of the product. V. Terms of delivery of goods. Roman 3. Reply to an inquiry. After receiving an inquiry from the buyer, a seller may reply it by sending any of the following documents: quotation, price list, price current, catalog, sending sample, and tender. These commerce documents used in home trade. Second-hand quotations. These are quotations given by producers to other traders. The price list. This is a list of goods available for sale together with their respective prices. Or it is a document prepared by the seller listing down all the goods in the business with their respective prices. The price current. This is a price list which has been revised to show the available goods and their current market prices. It is used where the original prices quoted on the price list have changed. The catalog. This is a well-designed booklet prepared by the seller which describes each good offered for sale. It shows appearance of goods as they are at the seller's place. It is designed in very attractive colors of the product. A. Sending a sample. A sample is an item that represents a collection of goods offered for sale. A seller may send a sample of goods available for sale to the buyer to observe the quality, color, shape of the product before placing an order. F. Tender. This is a document which is sent in reply to an inquiry made by the buyer, usually in form of an advertisement in the media inviting potential suppliers to submit their respective estimates or price offers for the cost of supplying specific goods or services. The buyer will usually award the tender to the supplier with favorable quotations. It is a document which indicates the prescription of goods or services, terms of sale, and prices at which the seller can supply them to prospective buyers. 4. Placing an order. An order/local purchase order, LPO. This is a document prepared by the buyer and sent to the prospective suppliers/or sellers requesting him to supply the specified goods on the document. The order note is prepared in duplicate, i.e. the original copy is sent to the supplier and the duplicate retained by the buyer. Contents of an order note. Local purchase order. I. Name and address of the buyer. Roman 2. Name and address of the seller. Roman 3. Date of the order. Roman 4. Order number. V. Type of goods. Roman 6. Quantity and description of goods. Commerce documents used in home trade. At this stage, the seller determines the terms of sale, i.e. whether to sell goods on cash or on credit. In case the seller decides to sell goods on cash basis, the following alternative terms may be used: cash with order CWO, cash on delivery COD, spot cash, prompt cash. Cash sales slip. This is a document issued by a seller to a buyer who pays cash at the time of purchasing goods. It acts as an evidence of receipt of money in cash transaction. The credit terms. This is where a customer requires goods and services and payments are made later after a specified period. Roman 6. Credit status inquiry. This is an inquiry by the seller to find out the credit worthiness of a customer buyer who is seeking for credit for the first time before supplying him goods on credit. This is done by sending a document called Credit Status Inquiry. Such information may be obtained from banks to the buyer. If the buyer has an account in any bank, he may be required to name the banks to serve as referees through giving a confidential report about the customer's financial status. Roman 2. Previous suppliers to the buyer. The buyer may be asked to give the names of his previous suppliers from whom information about his credit worthiness may be obtained. Roman 3. Trade associations where the buyer is a member. Information about a buyer's credit worthiness may be obtained from his trade association. Roman 4. Customers of the seller. Information about a customer's paying habits may be obtained from some customers of the seller who may happen to know the new customer. V. Commercial Inquiry Agency. Some information may obtain from the specialized institution which supplies financial information about firms and businessmen for a fee. NB. After gathering enough information about the credit worthiness of the buyer, the seller then supplies goods and services on credit to the buyer. Roman 7. Backing the goods. Commerce documents used in home trade. Roman 8. Delivery of goods. After receiving the order from the buyer, the seller makes arrangement to deliver the goods. The following documents are involved in the process of delivering goods. Delivery note. This is a document prepared by the seller and sent to the buyer through the transporter as a proof of delivery of goods. When goods are delivered, the buyer signs the delivery note and duplicate as a proof that he has received the good and returns one copy to the seller after cross-checking that the goods delivered correspond with those on the delivery note and the order note. Pro forma invoice. This is a document prepared by the seller and sent to the buyer when goods are to be sent after they have been paid for before goods are delivered to the buyer. A pro forma invoice is prepared because of the following reasons. If the supplier is not willing to sell goods on credit or if payment is required in advance. Roman 2. If the seller is supplying goods to the buyer for the first time. Roman 3. If the seller is not sure of the current prices of the good. Dispatch notice note. This is a document sent by the seller to the buyer informing him of the preparation of goods for delivery, mode of delivery, and expected date of arrival of goods. This enables the buyer to prepare for the receipt of goods. Consignment note. This is a document provided by the carrier of goods showing the details of goods to be dispatched. It indicates the names and addresses of the seller and the buyer and whether the freight has already been paid or will be paid by the buyer at the point of destination. Roman 9. Invoicing. On delivery of goods to the buyer, a seller informs the buyer of the amount due by preparing a document called an invoice. Invoice. This is a document prepared by the seller and sent to the buyer when goods are sold on credit, reminding the buyer to effect payments for the amount due on goods supplied. It is sent only when goods are sold on credit. When goods are sold on cash, a cash sale slip is issued to mark the end of the transaction. Contents of an invoice. An invoice contains the following information. The name and address of the seller. Roman 2. The name and address of the buyer. Roman 3. The date on which it is being prepared. Commerce documents used in home trade. Roman 8. Length of credit period allowed. Roman 9. Stamp and signature. Errors and omissions accepted. The document has an abbreviation E and OE meaning errors and omissions accepted. Functions of an invoice. It serves as a notification to the buyer of the amount owed by him. Roman 2. It serves as an evidence of debt due to the seller. Steps/procedures taken by the buyer when an invoice is received. Cross-check the invoice with the order note to ensure that the goods are correct. Roman 2. He should check against package sheet and delivery note whether it is the correct quantity of goods ordered for. Roman 3. Check whether it is the right price indicated in a price list and right calculation to ensure no overcharge. Roman 4. In case there are no discrepancies in an invoice, the buyer prepares a check to the seller. If the invoice is not correct, the buyer informs the seller accordingly. B. File it for future reference. Procedures or steps taken by a buyer on receiving the goods. Check them to ensure that they are not damaged. Roman 2. Verify the goods received with a copy of the order and package sheet to ensure that the goods received are those ordered for. Roman 3. Write in the store record books the description and quantity of goods received. Roman 4. If the goods are found to be correct, the buyer arranges for payment. Discrepancies in an invoice. In case the invoice is found to be incorrect, the buyer takes appropriate steps to ensure that he pays only the correct amount for the goods purchased. An incorrect invoice may lead to an overcharge or an undercharge. An overcharge in an invoice is corrected using a credit note, while an undercharge on an invoice is corrected using a debit note. Debit note. This is a document sent by the seller to the buyer to correct an undercharge in the invoice. The undercharge may be due to wrong prices quoted, arithmetical error, or omissions of figures in the total, etc. The buyer is informed that his account has been debited. Commerce documents used in home trade. Wrong totaling, etc. The buyer is informed that his account has been credited with the overcharge, thus reducing the amount payable. Goods return note. This is a document prepared and sent by the buyer to the seller when returning some defective goods to the seller. On receipt of the goods returned by the buyer, a seller issues a credit note to the buyer, thereby relieving him from paying for them. Goods may be returned because of the following reasons. I. If goods are highly priced. Roman 2. If goods are out of fashion. Roman 3. If goods are damaged on the way. Roman 4. If they are not the exact type of goods ordered for. B. If they are expired. And B. A credit note is a special document whereby it is the only one prepared using red ink. Roman 11. Statement of account. This is a document prepared and sent by the seller to the buyer, showing a summary of transactions which have taken place between the buyer and the seller for a given period of time, requiring the buyer to clear his account. Therefore, it reminds the buyer to pay for the goods supplied to him in the previous period of time. Contents of a statement of account. I. Name and address of the seller. Roman 2. Name and address of the buyer. Roman 3. Date of issue. Roman 4. Amount due from the buyer at the beginning of the month. The total value of goods bought on credit. Roman 6. Total payments so far made by the buyer during the month. Roman 7. The total amount of money due at the end of the month. Roman 8. Number of invoices issued during the month. Procedures/steps taken by the buyer on the receipt of a statement of account. I. Checking it against the previous statement of account to ensure that the opening balance is correct. Roman 2. Verify any payment made during the month. Roman 3. Verify the statement with invoices received during the month. Commerce documents used in home trade. Payment of account is a situation where the buyer clears his outstanding debt with the seller, either by cash or by check. On receiving payment by cash, a seller issues a document called a receipt which marks the end of a transaction. When payment is made by check, a receipt is not issued since a check is an evidence of payment itself. Receipt. This is a document issued by the seller to the buyer acknowledging that payment has been made. It marks the end of a credit transaction. This document is prepared after receiving money either by cash or check. Contents of a receipt. I. Name and address of the seller. Roman 2. Name and address of the buyer. Roman 3. Date of issue. Roman 4. Receipt number. E. Unit price of goods. Roman 6. Quantity and description of goods. Roman 7. Total cost of goods purchased. Roman 8. Tax and tax identification number. Roman 9. Stamp and signature. EPS. Errors and omission accepted. Differences between a cash sale slip and a receipt. I. A cash sale only acknowledges receipt of payment in cash, while a receipt acknowledges receipt of money in both cash and by check. Roman 2. A cash sale slip marks the end of a cash transaction, while a receipt marks the end of both cash and credit transactions. Roman 3. A cash sale slip is a proof of receipt of money in cash form, while a receipt is a proof of receiving money from many sources. Importance of business documents. I. They acknowledge payment of money, e.g., receipts and cash sale slips. Roman 2. They enable the seller to know customers who have taken goods on credit debtors, e.g., invoices. Roman 3. They provide detailed information about goods and services available for sale, e.g., commerce documents used in home trade. Roman 6. They provide information for writing up books of accounts. Roman 7. They are used for record purposes references. Roman 8. They enable follow-up of transactions through auditing. Terms of payment. In case a seller decides to sell goods only on cash, the following terms are used. 1. Cash. This is the common means of payment for goods or services which is prepared by many businessmen. Cash payment is categorized into I. Cash on delivery COD. Roman 2. Cash with order CWO. Roman 3. Spot cash. Roman 4. Prompt cash. I. Cash on delivery. This is where the buyer pays for the goods as they are delivered to him. This is most applicable when goods are sent through delivery agencies like post office. Roman 2. Cash with order. This is a system where the buyer pays for the goods as he sends his order. This comes as a result of the seller not willing to offer goods on credit. Roman 3. Spot cash. This is where the buyer pays for the goods as he gets them from the seller. Here, payment is made when goods are handed to the customer. Roman 4. Prompt cash. This refers to cash payment within a few days after delivery of goods or is agreed in the contract. 2. Credit. This is a means of payment where the customer buys goods and makes payments at a later date, i.e., payments are made after an agreed period of time. Advantages of credit. It enables sellers to increase their turnover/sales. Roman 2. It increases the profit margin of the business. Roman 3. It enables people without cash to get goods. Commerce documents used in home trade. Roman 4. Credit selling requires a lot of capital, which is not easy to raise. Problems faced by traders in Uganda. Inadequate capital for initial investment and expanding the size of the business. Roman 2. High rate of interest charged by financial institutions when traders are getting loans. Roman 3. Poor transport and communication network, especially in rural areas, which lead to a delay in the supply of goods. Roman 4. Problem of stiff competition from foreigners who tend to reduce prices of their goods and capture a large size of market. The high cost of rent in urban areas. This consumes the largest portion of the profits of the business. Roman 6. Complicated formalities where traders have to get trade licenses before starting a business. Roman 7. High taxes levied on business enterprises reduce the volume of products handled and hence reducing the profits. Roman 8. Most customers prefer imported goods to locally produced goods, which reduces the market for locally produced goods. Roman 9. Limited training for traders to enable effective running of the business. Its small market as a result of the fact that most people in Uganda are low-income earners/poor. Roman 11. Traders are faced with so many risks such as fire and theft, which limits the level of business operations. Roman 12. Political instability in some areas of the country has greatly limited the levels of business